Hello everyone and welcome to the second part of our video on futures contracts. In part 1, we looked at how they work and why they are so important in the financial markets. Now, we will focus on a key aspect of them, standardization. But what exactly does standardized contract mean? We will find out together in this part of the video.
An exchange-traded futures contract specifies the quality, quantity, physical delivery time, and location for the product in question. This product may be a commodity or a financial asset. The contract specifications are identical for all participants. This feature of futures contracts allows the buyer or seller to easily transfer ownership of the contract through a trading transaction. Given the standardization of the contract specifications, the only variable in the contract is the price. Futures contracts are products created by regulated exchanges. Therefore, the exchange is responsible for standardizing the specifications of each contract. Exchanging through exchanges also ensures compliance with the contract, eliminating counterparty risk. Every futures contract traded on an exchange is centrally cleared. This means that when a futures contract is bought or sold, the exchange becomes the buyer for every seller and the seller for every buyer. This greatly reduces the credit risk associated with the default of an individual buyer or seller. By bringing buyers and sellers together on the same trading platform, the exchange allows participants to enter and exit the market with ease, making futures markets highly liquid and optimal for pricing. The most important futures markets are Chicago Mercantile Exchange, CME, is one of the largest futures markets in the world and offers futures contracts and options on a wide range of assets, including commodities, currencies, equity, and bond benchmarks. Intercontinental Exchange, ICE, is a global market offering futures contracts and options on commodities, currencies, energy, and other financial products. Eurex is one of Europe's largest markets for futures and options contracts, based in Frankfurt, Germany. It offers contracts on equity, bond, currency, and commodity benchmarks. Tokyo Commodity Exchange, TACOM, is Japan's main futures market for metals, energy, and other commodities. London Metal Exchange, LME, is the world's largest market for base metals, offering futures contracts and options on copper, aluminium, nickel, and other metals.
I hope these videos have cleared up some of your doubts about futures contracts. If you want to find out more about this fascinating world and don't miss the next videos, subscribe to our channel and activate your notifications. We are waiting for you.